When we talk about Bitcoin, there are multiple factors that come into play. And in this article, they highlight three specific trends. And I'm going to be reading through this article. I'll have a link in the description and I'll give my thoughts towards the end as well. I'm not a financial advisor. This is not financial advice. Everything I'm sharing is my own opinion, it's my own research. I highly encourage you to go do your own research. And with that being said, let's go ahead and dive on into the news. This titled article is Three Emerging Crypto Trends to Keep an Eye on While Bitcoin Price Consolidates. Bitcoin's price is range bound, giving other assets room to gain a foothold in an otherwise down market. This week, Bitcoin's price took a tumble as a hotter than expected Consumer Price Index or CPI report showed high inflation remains a persistent challenge despite a wave of interest rate hikes from the United States Federal Reserve. Interestingly, the market's negative reaction to a high CPI print seemed priced in by investors, and Bitcoin and Ether's prices reclaimed all of their intraday losses to close the day in the black. A quick look at Bitcoin's market structure shows that even with the post-CPI print drop, the price continues to trade in the same price range it has been in for the past 122 days. Adding to this dynamic, Cointelegraph market analyst Ray Salmon reported on a unique situation where Bitcoin's future open interest is at record high, while its volatility is also near record lows. These factors, along with other indicators, have historically preceded explosive price movements, but history will also show that predicting the direction of these moves is nearly impossible. So aside from multiple metrics hinting that a decisive price move is brewing, Bitcoin is still doing more of the same thing it's done for the past 4.5 months. With that being the case, it's perhaps time to start looking elsewhere for emerging trends and possible opportunities. Here are a few data points that I've continued to be intrigued by. New rotations will emerge. Ethereum's price has lost its luster in the now post-merge era, and the asset now reflects the bearish trend that dominates the rest of the market. Since the merge, Ethereum's price is down 30% from its $2,000 high, and it's likely that a good deal of the speculative capital that backed the bullish merge narrative is now in stablecoins looking for the next investment opportunity. Aside from Ethereum being an asymmetrical performer in the last 4 months, Cosmos, also known as Atom, also defied the market downtrend by posting a monster rally from $5.40 to $16.85. As covered thoroughly by Cointelegraph, oversold conditions along with the hype of Cosmos 2.0 backed the bullish price action seen in the altcoin, but this chart continues to capture my imagination. According to the revised Cosmos white paper, the current supply of Atom will dynamically adjust based on the supply and demand of its staking, as shown in the chart above when Cosmos 2.0 kicks in for the first 10 months. Issuance of new Atom tokens is high, but after the 36th month, the asset becomes deflationary. From the vantage point of technical analysis, Atom's price appears to have hit a local top as the months leading up to Cosmos 2.0 were a, quote, buy the rumors, sell the news type of event. But it will be interesting to see what transpires with Atom's price as the market approaches month 20 in the diagram above. Keep an eye on Ethereum network activity. Since the Ethereum merge, Ether emissions have dropped by 97%. And while the price has pulled back significantly over the coming months, investors might keep an eye on Ethereum network activity, developments with Ethereum staking across decentralized finance and institutional products, along with any spikes in gas connected to network activity. While the price could succumb to bearish pressure in the short term, if the market begins to turn around if new trends trigger increased use of DeFi products, it's possible that Ethereum's price could react positively to those developments. Post-merge Bitcoin price action will likely remain king. While new trends across various altcoins may emerge, it's important to remember the wider context in which crypto assets exist. Global economies are on the rocks, and persistently high inflation remains an issue in the United States and many other countries. Bond prices are whipsawing, and a looming debt crisis makes its presence known on a daily basis. Risk on assets like cryptocurrencies are incredibly volatile, and even the strongest price trends in crypto, whether backed by fundamentals or not, are subject to the whimsy of macro factors such as equities markets, geopolitics, and other market events that impact investor sentiment. Keeping this in mind, Bitcoin remains the largest asset by market capitalization within the crypto sector. And any sharp moves from Bitcoin's price are bound to support or suppress the micro trends that might be gaining traction in the market. There's still the possibility of a sharp downside in Bitcoin's price, so traders are encouraged to calculate investment size according to their own appetite for risk. And while multiple metrics might support opening long positions in various crypto assets, it still seems too early to fully ape in. This newsletter was written by Big Smokey, the author of the Humble Pontificator Substack and resident newsletter author at Cointelegraph. Each Friday, Big Smokey will write market insights, trending how-tos, analyses, and early bird research on potential emerging trends within the crypto market. All right, so now that I've gone ahead and shared their point of view, their analysis on these different key elements, I'm going to go ahead and share mine. As far as for going in with Cosmos, it's interesting to see what's going on there, but I think out of these, my biggest attention focus is definitely on Ethereum, because Ethereum is the second biggest cryptocurrency. It's right on there on that level with Bitcoin. In fact, a lot of people have said that they feel that Ethereum could overtake that of Bitcoin, especially with the recent change, suggesting that it should be a little bit easier on the gas fees, and we're seeing progress being made there, right? So you look at those elements, you have to ask yourselves, if Ethereum starts to make a move, could we also see other people want to hop back into cryptos in general? Because Ethereum is technically an altcoin. It's not Bitcoin. Anything that's not Bitcoin is considered an altcoin. So we could see an altcoin season start to make a run. Then we could see people taking their profits from those more risky type investments and then pulling that over and dropping it into Bitcoin, as oftentimes of all the cryptos, Bitcoin's been considered the one that's the most safe. It's been around the longest. It's got its nice design system from a security standpoint with the hash system, everything like that. So that's one factor to take into consideration. Now let's go ahead and move on to inflation. So when you actually have, like, the Federal Reserve, if they print out more money, for example, when you print out more money, there's more money that's in circulation. And when you end up having those kinds of circumstances, oftentimes once it actually starts getting spent, we'll see a lot of the other prices of things starting to go up. And how does that actually make sense? Because if I go into, let's say, a Starbucks and I only ordered 1 cup of coffee before, but now I'm ordering 3 cups of coffee, well, you have to be able to meet that demand as a supplier, which means that the place that you're ordering from, you're going to need to order more of those things. Then they're going to have to hire more workers. They're going to have to get more delivery trucks, etc. You have to factor in that. So it goes across the board. What I think is interesting here is that you also need to realize that it's kind of an inevitability, right? As long as you still have demand for cryptocurrency, if you print more money, then you should have more money that could technically flow into Bitcoin. But in the same sense, when you have a $100 bill, if you look at the value of what you could buy with a $100 bill today, because of inflation, you cannot buy as many things as you could 10 years ago with that same $100 bill, right? So the idea of you being a millionaire is not as significant when you say it out loud and what you can actually do with it as it was if you were a millionaire 100 years ago. So what I'm trying to get at with that logic is the idea of Bitcoin being $69,000 again. As you print more money, it's more easy for it to hit $69,000. But that doesn't mean that at that point in time with Bitcoin that you could buy the same amount of things with that $69,000 worth of Bitcoin, because the price of other things around it has gone up relative due to the fact of inflation, right? So I think personally, it's an inevitability that we will see crypto prices start to go back up on the rise as long as there continues to be demand. Now, what could potentially cause a huge wrench into this equation is, in my opinion, debt. And the fact is that some of the biggest players that are out there have incredible amounts of debt. And there's very little that's actually being taken into place here to execute on them paying off those debts. Margin calls is a very common phrase that we'll see, especially within the stock market, right? People that are over leveraged in these positions. When you look at the stock market and you've got businesses that can route the majority of all shares of stock through a dark pool where it's got its own separate set of rules, there's multiple days of trading, the T+2, etc. You got all that kind of stuff that's going on. You have to ask yourselves, if they start to get executed on, they have to pay off those debts. What exactly is that going to mean? That means that they're going to have to find the money to pay those off, which means they have to sell off other assets in order to be able to come up with the funds to pay off those situations. So we could see a driving price down in certain instances and then a dramatic price increase in other circumstances. But then at that point, the entire system potentially could implode and collapse in on itself. So where is the potential of these people, these businesses, actually getting executed on for those reasons? I don't know. That's the hard part, is how do you actually get them to go through with these things so that they don't keep getting away with the levels of corruption that they're doing? They're making tons of money. Meanwhile, us as the regular retail investors, we're the ones being left high and dry. And we're the ones made out to look like we're the idiots of the circumstance. But they're playing by their own separate set of rules. And when they break the standard rules, there's a little slap on the wrist. And then what happens is you'll see like the SEC. All they're basically doing is taking their cut of the circumstance. Instead of this massive penalization where it's like, hey, you've been violating these rules over and over again. I'll use Citadel as an example. And now you're not allowed to do business anymore because you are not to be trusted. No, it's more like, hey, you keep doing your violations. You get to keep the majority of the money. We're just going to take a little bit of a cut off of this. So something has to change, right? We have to change something in the system. But how do you make that change in such a delicate way that that whole tower that you built out of dominoes doesn't come crashing down completely? I know, guys. So, yes, as far as for what to keep an eye on, look at what's going on with Ethereum, see if it makes some major moves there. Keep an eye on politics, what's going on with that there. But just realize, as I mentioned in my other videos, there are many factors that come into play with this stuff. Again, I'm not a financial advisor. This is not financial advice. It's my own opinion. Thank you so much to my Patreon supporters. Double shout out thank you to WeLoveSafeman.com, Murad Shaker, Victor Vegas, Safeman Oz for being higher level patrons. Thank you also to my YouTube members for your guys' support. And if you guys are new to the channel, don't forget to hit subscribe, hit the thumbs up, like button. God bless, and we will see you in the next episode.